today's episode, we will be focusing on the issue of treasury risk management. Treasury risk can be uncertain at times, difficult to tackle, and have a significant economic impact on a business. This has been compounded in recent times by the introduction of new data and reporting requirements. To provide insight on how treasurers are handling treasury risk by managing end-to-end workflows with best practice management of cash, liquidity, and investments are Nita Baindur, Assistant Treasurer at Agilent Technologies, and Anand Natarajan, TMT and FinTech Cash Management Lead from Standard Chartered. Hi guys, thank you for joining us.
Thank
Hello.
you.
We know from experience that technology can help corporate treasurers gain greater visibility to help manage risks with greater accuracy. Anand, perhaps you could jump in here. What tools would you suggest treasurers use to mitigate currency risk and gain greater insight into their operations?
Sure, Rajiv. Thanks. So I think it's a combination of, I would say, solutions, products, technologies, all driven by sort of the market scenario that we see ourselves in. So what we are seeing in this space from a client or a product standpoint is, a lot of focus on counterparty risk. Especially given the macroeconomic situation today in a number of emerging markets, right? For companies who have exposure to, let's say, markets in Middle East, markets in Asia, where things are quite volatile sometimes. Counterparty risk becomes a big component of how companies want to manage their overall liquidity position. So we are seeing companies sort of reaching out to us, where historically they might have some sort of counterparty exposure to local banks or local entities. They want to try and sort of shift that exposure away to more recognized financial institutions that they are more comfortable working with. And so we're working with clients on stuff like escrow accounts, where the money sits in a neutral financial institution that companies are more comfortable dealing with. So that's become a big component of how some of these companies want to manage risk as well. On the FX standpoint, mitigating FX risk through real-time FX trades for e-commerce transactions, especially because we've seen a lot in the e-commerce and fintech space. Like if you go to a website and you want to try and buy a product, usually companies would give you the options to buy and sell in multiple currencies, but at the back end these companies are really trying to manage the FX risk on their end to make sure that they are not short on cash in any one currency position or the other. But instead of making this like a risk management situation, can you actually use some of the real-time APIs and FX tools that banks are coming up with and other fintechs are coming up with, to make sure that this entire process can actually be something that is a profit-making initiative and not necessarily a cost initiative. So that's a big component as well. I would say interest optimization structures are also becoming fairly common. You obviously can't take liquidity out of every market that you want to operate in as much as you would like to, but you can still take advantage of surplus cash positions that you might see yourself in some of these countries. So we are working with clients on setting up, interest optimization structures where they take advantage of all the surplus cash positions that are held in various markets, and they get the overall interest yield in a centralized location of their choice. So this is becoming more and more common as well. And maybe the one more thing I would add is there are a lot of regulatory changes that we are seeing nowadays in terms of data localization. Where is data stored? If you're doing any online transactions, if you're doing any e-commerce transactions, localizing the data, making sure that the regulators have some sort of purview over it. So this is causing a shift in how companies are looking to manage their online transactions as well. So working with these companies to help them address the data localization challenges, provide support for various forms of data storage and alternative payment methods, that's become a big component as well.
Nita, could you also talk us through any recent challenges you have faced in managing risks and how you overcame them?
Sure. Yeah, so actually, we did pretty well this past year when the dollar appreciated against most currencies because our cash flow hedging program performed exactly the way it was supposed to. But we're not less resting on our laurels, and we want to be positioned well should the dollar decline. Another thing we're looking at is how can we net exposures in the same currency across entities, because in the past we didn't net exposure, and that sort of increases the cost of hedging. So now we're trying to automate the process where we can net our external trades across a currency, but still at the same time retain the original back-to-back trades that we have with the internal entities so that we continue to meet both local GAAP and US GAAP requirements. That way, the internal allocation of FX gains losses remains unchanged, but externally that enables us to reduce the number of trades and thereby the cost of hedging.
Given the events of the past few years, you have the COVID, you have the recession, what have you. So the importance of having both a short and long-term risk management strategy in place could not be more crucial. So what do businesses risk in terms of the bottom line if they do not plan ahead to these risks?
Sure, absolutely. And I think you hit the nail on the head, right? The long-term strategy in the current macroeconomic environment becomes especially important. What we are seeing is, there are companies with exposure to countries in emerging markets, which are now seeing massive credit rating downgrades, FX reserves depleting, these countries getting into some sort of financial issues, inability to repay external debt, and so on. So these countries are now imposing severe restrictions on the ability to repatriate cash out, right? So if you were a company with any sort of meaningful presence, and you're seeing this today in Pakistan, for example, in Sri Lanka, and Nigeria is also imposing a lot of FX restrictions. So if you're a company with any sort of meaningful exposure in these markets, you are now in a position where you may have money sitting in an account that you cannot take out, or you may have money that is owed to you by somebody that you again cannot take out at this point. So I think it's becoming more and more evident that it is important to diversify across currencies, countries, and counterparties. And we are seeing this a lot, especially in the technology manufacturing space as well. We've all seen, public reports about, when the phone companies no longer being able to rely on China as a primary source of manufacturing because China obviously had severe lockdown restrictions. There was a lot of volatility in terms of trying to understand when the economy was going to fully open up, and companies with significant manufacturing exposure in China were now sort of at a loss for how to manage their production lines going forward. So we are now seeing alternatives pop up. India obviously is a country that is seeing a lot of interest in this space now, just slowly moving away from being a traditional service economy to more of a high-tech manufacturing economy as well. So I think we will see more of that, alternative sites popping up as big manufacturing locations in the technology space. In the e-commerce space and the fintech space as well, we are looking for companies to diversify their sourcing base. So where the merchants are located, for example, to avoid exposure to 2 or 3 markets. So we've seen announcements from some of the big e-commerce companies about wanting to change and add more and more locations from where merchants can actually sell on the platform, so that they can source products from various markets and also be a little bit more diversified in how they manage the FX risk as well. So I think we will continue to see more of that. And again, this will all form part of a longer term strategy to diversify risk and make sure that even if there are certain sectors or certain parts of the world that are facing issues, on an aggregate basis, these companies are still able to manage their risk in a satisfactory manner.
Speaking of strategies, I also want to touch on managing end-to-end workflows, which forms a core part of any organization's risk management strategy. Nita, so I'm going to stick with you again. And within cash management space, how does your team go about this?
Yeah, I already spoke about how in the FX space we have end-to-end, workflows with tools, right? We have the same thing in our cash management space as well. We have workflows that, end-to-end workflows that not only increase productivity, but they also ensure better controls. For example, we have a virtual approval process for treasury payment requests. Now, we don't have to maintain hard copy specimen signatures and verify signature authority and so on. So that enables us to, automate that treasury payment request and upload it to the, treasury management system seamlessly. We also invest excess funds in money market funds via a portal. And this portal helps us ensure that the money market funds meet our investment policy requirements, whether it's, as a percentage of our total holdings or as a percentage of assets under management of the money market fund, and we can even monitor yields there. So this portal also interfaces with our treasury management system, and this in turn facilitates the accounting at the back end, whether it's accounting for income or capital gains losses and so on. It interfaces with our ERP. So it's really from right from the start to the end, it's a seamless workflow. Then we also have, an in-house bank for cash pooling with that's managed by our Singapore entity, and many of our global entities deposit their excess funds in this Singapore cash pool and withdraw as needed. We have another cash pool for just specifically for our China entities. So what we have is a combination of process, tools, and integration with our treasury management system that helps us manage the end-to-end workflows and helps us get better visibility, better controls, and increases productivity.
And so, Anand, I'm going to come to you now. In your role, you must have some view of what would be classed as best practice when it comes to managing end-to-end workflows. So, what advice would you give to businesses?
Sure. So maybe just to take off on Nita's last point around cash pooling, because I think that is something that is very relevant right now. Cash pooling today is nowhere close to what cash pooling solutions look like 5-6 years ago. Right? There's been a significant shift in the space towards usage of bank developed solutions, but also partnering with third parties and fintech companies to develop some of these solutions as well. So I would say at a high level, these solutions are now becoming more and more sophisticated, whereas earlier cash pooling solutions would primarily involve just pooling in cash from 2 or 3 of your main banks. Most banks now have developed the ability to pool in cash from these one-off banks in various markets as well, so that you're not leaving any sort of idle cash sitting around. So the ability to get cash in from banks sitting in remote parts of the world, those technologies have become a lot more sophisticated.
And so, Nita, and you've talked about the processes, but how about the technology itself? Have you implemented any new technology recently to improve your team's workflow management?
Yeah, we actually recently upgraded our treasury management system. And as part of that upgrade, we had to make sure, that all the interfaces with the various tools, whether it be, the tools that I mentioned in the FX space for managing exposure, getting quotes, doing confirmations. Then in the cash management space, our interfaces with our the portal that we use for investing in money market funds, or the bank portal that we use for issuing commercial paper, or bank statements that come in. All these interface with our treasury management system. So it's pretty seamless for us, and we get really good visibility to both our exposures as well as our bank balances. Now, in reviewing our bank fee analysis statements, we recently found that we were spending quite a bit on wires. So we started, for example, working with our accounts payable organization and our cash management bank to see how we could replace these wires with maybe same day ACH or international ACH. And then, in the FX space, I already mentioned we've implemented several tools for exposure management, quotes, and confirmation.
Brilliant. Thank you very much. Thank you both for your insightful discourse on managing risks. It was great to hear your insight on the approaches and tools you have used internally and from what you've seen to manage risks, as well as the importance of streamlining workflow management to that end. So yeah, it was a very brilliant and insightful discussion, I must say. And for those eager to watch more video content or simply looking to access information on the latest emerging trends impacting the Treasury function, please visit the Global Treasurer online and keep an eye out for the next episode in the Future in Focus series. Thank you both for attending and just having this insightful discussions, and thank you everyone for watching.
Thank
Goodbye.
you.
Thank you, Rajiv. Thank you.